So today I want to share some information with you about what the stock market is, um, and how you can invest in it. So to do that, we need to talk about what a stock is. So a stock is a piece of paper or an electronic tracking bit offered by a company to allow people to purchase a part of the company. And so buying stock makes you part owner of a company. So why does companies sell a stock? Stock is initially issued via an initial public offering to help a company raise capital. They'll then use that money to buy more equipment or hire people to create new products to make the company more money. So the company would do this instead of getting a loan from a bank. So the benefit for the company of issuing stock versus a loan is that the company doesn't have to pay the stock money back. Unlike if they were getting money from a bank, they would have to pay that money back. So if you bought all the stock of a company, you'd effectively own the company, and it would be a private company. So stock does not maintain the price that you paid for it. Its price changes based on information of how the company is performing. So if a company sells more products in one quarter, its stock will likely go up. And if the company sells less stock or less product a quarter, then its stock will go down. So that's what makes buying stock risky. But it's also risky to not buy stocks, which I'll talk about in another video. Where can you buy stocks? In the United States, there are two stock exchanges that stocks are traded on: the New York Stock Exchange and the NASDAQ. So to actually purchase the stocks, though, you have to buy them from a website like E-Trade, which charges you $4.95 per trade. Or there's a newer app called Robinhood, which doesn't charge fees, I believe, and you can buy individual stocks in your 401k or HSA, or there are some other options also. So looking at the New York Stock Exchange, there's about 2,800 companies listed, and together those companies have a market capitalization of $21 trillion as of June this year. The NASDAQ, see, it has a few more companies listed, but their market capitalization is smaller. So overall, they're smaller companies on average. So that being said, there are between 5,000 and 6,000 publicly traded companies in the U.S. at any time. So the total U.S. market capitalization of publicly traded companies, which is just the number of stocks each company has issued by its share price, is $29 trillion. You can buy, as I said, you can buy individual stocks of companies. For example, you could buy 100 stocks of the Ford company, or you could buy 1,000 stocks. You can also buy Tesla, Google, Apple, or any of the other publicly listed companies. The risk with buying individual stocks is that you choose just a few companies, and if those companies end up performing poorly, they could go out of business and you could actually lose money. Again, this is why investing is risky. So a couple of companies that went out of business, Enron, if you all maybe remember that, as well as General Motors, more recently declared bankruptcy, and that effectively made their stock worth $0. And I personally lost $100 on GM stock, so I know that is possible. So that being said, there is an easy way to reduce your risk of investing. So what if you could own all 6,000 companies that I mentioned in the United States? So then if, say, one went out of business, you wouldn't necessarily lose all your money, and the gains from the others would offset your losses. Luckily, you can do that. There's a simple index fund called the Vanguard Total Stock Market Index Fund, or VTSMX by its ticker symbol. So if you buy one share of that index fund, which is fairly cheap, then you can own all the stock. You can own a part of all the companies in the United States. And what is the best way to buy an index fund? I've written a previous video, and I will include a link in this video talking about target date funds. Basically, it is a fund that holds a group of funds. So you can see here, this target date fund that I'm showing includes the total U.S. stock market, also the total international market, and then a couple bond funds also. And as you get older, those will shift towards more bonds, which are just safer investments than stocks overall. So I think that this target date fund is a great thing to own if you're not really interested in knowing about stocks. It costs very little. It does exactly what you need it to do as far as investing your money in stocks and bonds, and it transfers more towards bonds over time as you age, which is great. So I think that's a great first start for everybody. Especially it'll save you from active managers who will have very high costs, which I've also talked about in a different video, and often underperform the stock market. So I'm also including a link to a very interesting page that I found called Visual Capitalist that shows you all the stock markets in the world by their market capitalization. And so that gives you kind of an idea of um, different where different companies are listed in the world. And so, for example, like Nintendo, which is a company based in Japan, they're actually listed on the Japanese stock exchange, not either of the stock exchanges that I mentioned in this video. So hope you learned something about index funds and stocks and investing. Thank you for watching.